So, okay, so here, stock market year-end review. Okay, all right. So first, I want to ask all of you, how many of you make money in this year? Okay, type in the chat. How many of you make money this year in the chat? It's a good year. Okay, this year is a good year for the stock market. So, okay, if let's say you make money, then you put a thumbs up, like the emoji thumbs up. You know how to do the emoji from your. Actually, you can do the emoji. Okay, if you don't know how to do the emoji, you can put a one. Okay, so then I can see how many in terms of the statistics, because you know how to do the thumbs up in the emoji. Okay, some people haven't traded. Okay. Mm. So if you know how to do the thumbs up in the emoji, you may do that. Um, it's actually beside your icon, and then you can do the emoji. Because of Genting, Fort Wing, do you have a lot of heavy position in Genting? Okay. I think Fort Wing is that you may be lower cost. When you lower cost, you overdone your lower cost averaging. Because sometimes you want to lower cost, right? Then you keep putting in. So that is a very dangerous. So I always say you have to track your proportion. I mean, look at your overall portfolio proportion, and then to see how much you want to allocate into this particular stock. Oh, Gamil is not traded yet. Okay. But I thought Gamil has always asked a lot of the stocks that you mentioned was quite good actually. So I thought you are investing in those stocks. Okay. Mm. Didn't sell buy share and long term. Oh, okay, good. So as long as you are what I can see that made from dividend, so meaning that you are probably holding some banking and plantation, all these dividend stocks. So all these stocks are this year are doing well. Okay, paper gain. So not only you have a dividend, but you also have a paper gain. Thickly you have one old stock. Also, I also did make money because of Genting Malaysia. Oh, Elaine, did you say you did not make money or you made money because of Genting Malaysia? Okay. Did not, yeah, did not. I also have Genting in my portfolio, but my Genting is a small proportion. So currently my portfolio, right, I have about 12, about 14, I think about less than 15 stocks. Two stocks are red. Okay, what are the two stocks are red? Genting and YTL Power. Okay, so these two stocks are in red. On paper, these two stocks are in red. Okay, the rest are all in green. Okay, so for Elaine said that the share price dropped that drastically. Okay. Philip says small gain. Okay. Daily says broke even on the unit trust. Okay. Mm. Because you just invested. Okay. Um, for some of you, I believe you have invested in the properties and the construction. Okay, so for those of you who have invested in the properties and construction, definitely it is a good year for you. Yeah, definitely it's a good year for you. And then if let's say, okay, later we will go through all the 13 sectors, then you know that actually half of the sectors are positive, but the other half of the sectors are in negative. Okay, so it depends on what stocks you are buying actually. Fortunately, only from bank dividends, some small gains, but still many in red. Oh, I see. It also depends on the timing. So if let's say you are buying from the maybe June or July onwards, maybe um you are probably seeing that the share price keep dropping, because after the September, right, then you see that the share price keep dropping. Next year will be better since I learned how to invest properly. Next year we should try to avoid like okay, this year we are being aggressive, okay, because we are like putting a lot of money into a single sector. Okay, so next year we have to try to avoid greedy. Okay, I would say we have to avoid greed. Okay, so that is the motto for next year. Avoid being greedy. So that will be the motto. Okay, Wing On says make money in Gamuda, TNB, Maybank, Public Bank, MBMR. Okay, still hold some old stock. I see. Okay, yeah. Um, so so we have to learn how to rotate lah, sector rotation. You see how I rotate when I'm position my portfolio. I always let you guys know that what I have done in my portfolio. I always transparent, right? So then you know how I position my portfolio. 30% are in bank, so I think should be okay because 30% in bank meaning that it is very stable. Okay, and then especially if you are holding into the next year, I think it's important that we hold stable dividend stock. Yeah, I think for the China stock, we are seeing recovery, and it's just that their economy is not doing well, so it will take some time. Okay, but I believe um China stock will pick up in for next year. It will pick up. Okay, so let's see. So this is our KLCI. Our KLCI this year, beginning of the year, this is January 2024. So from this year all the way to September, except the August, this August was like a 1 day drama. 1 day drama dropped 75 points, and then the next day reversed all the way. Okay, so this is a 1 day drama. So except this one, basically you see the January until September is actually very smooth. Okay, except all this small one, but it's quite smooth. Okay, and it was like consistently way above the 200-day MA line. Then after that, then you see this downtrend. Okay, so moving forward, we will have to be looking at horizontal trend. Okay, I don't think we will have a crash, but then it's more like a horizontal trend, and maybe some rally until here. To the first quarter of the year, maybe we have some rally until here. Then after that, then we will have some consolidation. Okay, so that is I'm looking at we still have this to grow, okay, until 1650. But maybe it's not the year end. Looks like this year end is quite a quiet year end. Okay, but of course we are still on the 17th, right? So I'm thinking the last week, which is the last week is what is like next week is 20 the last week is 24th, 23rd, 24th. Okay, 23rd, 24th. Next week onwards. If really the market is weak, then maybe you don't see much activity. Okay, so it also depends on the fund managers, their intention, whether they want to boost the market or not. Okay, so then this one is and also next year we are looking at the year ending with 5. 1995, 2005, 2015, 2025, 2025. Okay, the years that have a year ending with a 5, normally the statistics tell us that it is horizontal trend. So meaning that you start with, let's say, 1650, and then throughout the year you will go up to maybe 1700, and then you'll go down to 1580, and then year end you'll be back at about the same point as the beginning of the year. Okay, so that is the year end. Okay, so for year ending with 5, it will be bumpy in the middle, but then in the end, it will be back to square one. Okay, KL futures can up and 1650 in January 2025. Um, I hope we can, but I cannot guarantee that we can. It also depends on the fund managers whether they are, because now we're seeing that the foreign funds are selling every single day. The foreign funds are selling, so now it's the local funds are supporting. They are fighting between one another. So it depends on who wins. So if let's say the foreign funds stop selling, maybe we can touch the 1650. Okay, so it really depends on the fund, whether the fund flows, whether the foreign funds are still selling or not. Okay, so this year 2024 we know that fall, the year ending with fall is always a good year. Okay, like a top like that. Okay, so the year ending with fall is always like you will see that it's like a top. So can anybody tell me when will be the next top that we saw from the the statistics? When will be the next top? Okay, KSBI tomorrow up or down? Okay, I will say that tomorrow will be a bottom. Okay, for me, I think tomorrow will reach a bottom. Okay, if you are really thinking of a long futures contract, I think tomorrow you can find a low point to long futures contract. Um yeah, might. Okay, 7. The year ending with 7. So according to our Bursa, right, our cash index, you will see that this has been repeating for quite 20 more than 20 years. The year 30 years or 40 years repeating the same thing. So the year ending with 4 and the year ending with 7, we always see like a run up. The it's like a bull run. Okay, so 4 and 7. So we know this. So that means that between the years 5 and 6, we have to be conservative and then switch to dividend stock instead. Okay, instead of too eager to make money. Okay, if you are too eager to make money, sometimes you can be very aggressive. So when you are aggressive, sometimes you may lose some money. Okay, so we try to be uh like contented. Okay, conservative. Try not to be too aggressive. Okay. Oh, another thing. Remember, I think since last year I've been saying that the year ending with 3 and 4 is always good for the property, right? So, how many of you buy or sell property 2023 or 2024? Last year or this year? KLCI at wave 2 in weekly chart. Okay, later we'll see the KLCI. Okay. How many? These are all in the statistics, all these like 3 and 4, the year ending with 3 and 4 are all statistics that the property seems to be good, like moving. Okay. And then but when it comes to the 5, 6, it will be like tapering, slow down. And then 7, maybe another rally. Okay. And then the towards the end of the decade, like 9, 0, you'll be down again. And then 1, 2 all down. And then 3, 4 pick up again. So if you know the cycle of this economic cycle or the property cycle, right? Then perhaps you can time the investment, your buying and selling of your property. You can time a little bit. Um, However, if let's say you are buying for your own stay, then do not time. Okay. If you are buying a property for your own stay, then anytime it's a good time because you need the property, so you have to buy. And anyway, it's not for investment, so it's for your own stay. It's for really long time. So any property, if you buy really long time, sure, it will appreciate in value. Okay, but I'm referring to those people who want to speculate on the properties. You buy sell buy sell. This one maybe you need some timing. Okay, otherwise you will see yourself, caught in the like a high position, and then you want to let go, you cannot let go. Okay, so that kind of a thing. Okay, so I hope whoever sell property last year or this year, I hope it's a good price. Of course, you may regret because after you sell this year it may go higher, but nevertheless you have to um count blessing because if let's say this year you cannot sell, that means next year you may be harder for you to sell. Okay, so the earlier you sell, the better, right? Because if let's say the property is something that you want to get rid of a long time ago, but then it wasn't in a good year, and then suddenly this 2 year is good, then you will take the opportunity to sell it. Okay. Now, let's take a look at the uh, okay. So the U.S. market. Okay, so U.S. is a super bull run. It's a really a good run up for U.S. market this year. So basically, if you were to buy VOO or QQQ, VOO means S&P 500 index. QQQ is the Nasdaq index ETF. Or you buy Nvidia or the big seven, the big the big seven tech stocks, Nvidia, Microsoft, Meta, Amazon, uh, Google, Apple, and Netflix. So if you to buy this, normally you are making money. Okay. Yeah, Nvidia down a lot last few days. Yes, correct. Okay, so maybe later we can take a look at their chart. Okay. So but if you to look at the long-term outlook, right, even if you don't look at too long-term, you look at next year, next few years, these stocks are still will be in demand. Okay, I would still think that these stocks are in demand, so I wouldn't be too worried. But of course, for new beginner, if let's say you are thinking of buying, I think the best is the VOO, which is S&P 500 index, or the QQQ, which is the Nasdaq. Okay, so there are like a basket of ETF like that, a basket of stock in an ETF form. The seven are lumped under which ETF? S&P 500 is the US top 500, including the tech stock, whereas the QQQ is all the tech stock. So both are also in both. So the seven are in both S&P as well as QQQ. It's just that under the S&P it has other banking, airline, consumer, other stocks. Okay, but the QQQ is all tech stock. Okay, so I think the S&P is the best because it has other other sectors as well. Okay. And also another thing about the US market is that in a 10 years period, right, there are only 2 years that are down. 8 years are up. Okay, if you look at the US market in 10 years, 10 years, 10 years, you see that out of the 10 years that you're holding, 2 years are down, 8 years are up. Okay, so which means that this US stocks are something that I think all of us should hold. Okay, because of uh the good track record that it has been enjoying. Whereas for Malaysia stock is that 10 years, out of the 10 years, only 3 years are up. Okay, 7 years are down. Either 7 years are horizontal or down, and then only 3 years are up. Okay, so this is Malaysia stock market characteristics behavior. So if you only invest in the Malaysian stock market, then you will see that your portfolio is very boring. You don't people are making money, but then you are not. Okay, because you are investing 100% in Malaysian market. Uh, if let's say some of you invest in a crypto, I think you are also very happy this year because this year crypto market is like back to the 2020, 2021, that kind of a situation. It's like bull run. But then, however, it's not like the 2020 whereby very small stocks also can make a lot of money. This one is more focused on the bigger one, like the Bitcoin. Then some others like Ethereum is not doing too well. So selectively, okay, the cryptocurrency is more selectively. So but nevertheless, the risks are there. Okay, there are a lot of risks because it's at historical high. So you can see that this year is a very interesting year. So if you were to invest correctly, you actually make a lot of money if you were to invest correctly. But however, if you didn't invest the right thing, then in fact you will lose money. Okay, so it's a quite an interesting year. Okay. Then Singapore Straits Times, STI. STI this year is also doing very well. Okay, so beginning of the year, it was still below the 200 MA. Then now it is way above. It's reaching the historical high. Historical high was in 2008, 2007 or 2008. Okay, 3,900. So now it's 3,800. So it is very, very near the historical high level. How about the crypto ETF? Crypto ETF was launched this year. Just launched. I think it was last year or this year, I can't remember. Just launched only. So it is also good. Okay, if let's say you are thinking of buying into the crypto, but then you do not know what to buy, you can start from the crypto ETF. Okay, which is called IBIT. Okay, so that one is a good one. The current net asset value, I think is in billions. Okay, it's a very big cap ETF. Okay. Okay. So I think some of you are investing in the Singapore stock. It's a good alternative or diversification because Sing dollar is always diverging, always strengthening against Malaysian ringgit. Okay, so the Sing dollar from 1965, 62, 1965, it was 1 to 1. Even throughout the 70s, it was 1 to 1. And then from the early 1980s, right, it started to diverge 1 to 1. 1 is to 1.1, 1.2, then 1.5. Then by the early 2000s, become 1 to 2, 1 to 2. Okay, one Sing dollar is equivalent to 2 ringgit. By the last few years, it become 1 to 3. Okay, so they will never convert. They are always diverging. So if you want to diversify besides the USD, another currency will be the Sing dollar. Okay, so this will be the looking at your preserving your currency. Okay, otherwise if you want to buy iPhone or American products like McDonald's or Starbucks or Coffee Bean, all these American goods, you find that your money is getting smaller and smaller, and then these things are getting more expensive. Okay, so so you definitely have to diversify. Okay. Mm, okay. Ming On says that next year bull run for altcoins. I don't know. Do you think so? You think that this year is the large coin, the main coin, and then the next year will be the altcoin? I don't know. Okay, maybe. Okay, after the blue chip one, then become the small cap one. Maybe. Jane says that Takaful Alliance still can hold. Will people surrender their policy? Oh, you mean surrender their policy? I don't think you mean the premium is getting too expensive, so they surrender the policy, is it? No, I don't think so. Yeah, I think should be okay. Should be okay because the insurance um business, right? So I think should be okay. Okay. Do we need to wait for retracement if you want to buy the IBIT or can buy anytime since it's an ETF? Need to wait for retracement, yes. For this kind of an ETF, you look at the RSI. Anything that you want to hold for long term, right? I always want you to look at the RSI. Okay, so yeah. Okay. So this one is the eclipse, right? This year, remember every year end, we will look at the dates of the eclipse and then we try to see next year what are the dates that we need to be take care of, like be careful, right? So this year we saw that there are 4 eclipses. Now, um if you are in my Tuesday class, you will know that every year we keep track of the eclipse, and then the number of eclipses in the year will determine whether that year has any sign of recession or not. Okay, because according to the statistics, the history from 1940, the dates that we had, right, from 1940 until now, we see that in the past, there are some years where we have 6 eclipses. Okay, we have 6 eclipses or 5 eclipses. So those are the years whereby the economy started to slow down, and then it will lead into a recession. Okay, so by the time when you see that that particular year has 6 eclipses, that particular year most likely will experience a recession, and which means that the stock market will be selling down, which means that it is a good time to buy also. Okay, so you have to we will keep track. So these few years is all for eclipses. So which means that we are not going to see recession for these few years. 2023, 2024, 2025, 2026. 2027 started to have 5 eclipses. And then 2028 back to 4. And then 2029 5 again. Okay, so which means that the 2027 that 5 eclipses maybe is a brief one. Okay, it's not like a severe one. The one that severe one I think is 2030 something. Okay, so you have to check back at that table, the cafe astrology table there. So which means that the next 2 years, right, we are not going to see recession. It's just that it will be like challenging a bit because Donald Trump being the president, right? So that will be a bit of a challenging for the whole world. Okay. Okay. So next this year we see that these are the dates, right? So then last year I said that the more challenging years that we need to look at the stock market, whereby there will be some correction possible in the month of April and the month of October. Okay, and we see that, okay, let's say this is the US market. So the month of April, yeah, down, right? And this one we didn't spot it. Okay, so this one not in the eclipse. The October, yeah, okay, the October is here. So the October didn't drop too much. So the major one is actually this one and this one. The April and the this is August. April and end of July towards August. Okay, so these two. And then for Malaysia, the April is here, which is horizontal, and then the August is here. Okay, and October is this whole stretch from September all the way down to October. Okay, so it looks like this, the eclipse in the October month it's more impactful for Malaysia because we had a long stretch of a decline here. Okay, and then after that then we go horizontal. For Singapore, I think this one is the US. For Singapore, it's the August and August. Then this one is September, October also horizontal. Okay, so that is this year, and the highlight. Okay, so for highlight, later I will show you the next year one towards the end. So for highlights of the year is that we have seen an exceptional gains on the properties and the construction stock. Okay, 2 times, 3 times. I don't know if anybody has 4 times or not. Did any one of you experience 4 times gain of your stock? But for me, the maximum is 3 times, which is Gamuda. Yeah, Gamuda is 3 times. Marsiling is 3 times. I think what else? The rest only maybe less than 1 time or maybe about 2 times like that. Okay, so only these two. If let's say whoever has 4 times, you let me know what dot is that. Then solar eclipse visible in the US, because this year we saw that the solar eclipse passed through the US sky. Okay, so then we say that something will happen to them. Normally when you see spotted the solar eclipse on your country, you will experience the change of a government. Okay, so this one, true enough, they have lost the Biden has lost, and then the Donald Trump has won. So there's a change of the government, and also there is a assassination of Donald Trump. Okay, so this actually show that the solar eclipse is quite powerful. Okay, it tell you what is going. They will tell you the sign. Okay, you can see the sign or what might happen. Okay, what may come out. Okay, so in this case will be something to do with politics. For lunar eclipse will be more to the emotion. For solar eclipse, it's more to the politics. Okay, so for example, for Malaysia, right, the last time we had a solar eclipse that we saw it, okay, do you know which year that you saw a solar eclipse on the sky? Do you know which year? Did anybody remember which year we saw a solar eclipse on the sky? 2018? No. Is it which month? You remember which month was it? Okay. I remember clearly it was 2019. Okay, 2019 December. Okay, if you Google search, you will see that it was 2019 December. And it was a noon time or something, or in the morning. So I see that the cloud, the sun was actually covered, and then you can see a ring. And I remember many people took photographs and then they posted in the Facebook. Okay, I also took a photograph, and but I didn't post it in the Facebook. Okay, so it was a ring in the sun there. So it was 2019 December. And guess what happened? In the next few months in February, we had the what Sheraton move. We have the Sheraton move where we changed the government a few months later in February. Okay, so then we saw the change of government. Then when will be the next solar eclipse that we will be seeing? Okay, because solar eclipse will happen every year, but then the path is different. It will travel to a different path. Okay. So for example, this year you see in the sky of the US, right? But next year it will move to another country. So it will not. So the next time that the US sees the solar eclipse will be maybe 10 years or 20 years later. It's not like a frequent thing. It will be a rare occasion. Okay. So for Malaysia, it's also a rare thing. So the one that we just saw was 2018. 2019. So the next one maybe it's 20 years later. Okay. I tried to Google, and then but the Google told me it's 2044, which is 20 years later, 2044. Okay, so we'll see. Okay. So that is for solar eclipse. And US number 3 is the US stock market bull run led by the tech stock. Okay. And then number 4 is a strong FDI inflow to Malaysia. So the first half of the year, we registered 85 billion ringgit. Okay, so all these are positive. Then here is the FDI comparison. So a comparison from 2020 to 2023, we see that among ASEAN countries, Singapore is ranked number 1. Okay, especially these 2 years, 2022, 2023, 2024, these 3 years, their FDI break above 100 billion USD. It's like far ahead of all this combined together also cannot beat. You see, all of this combined together also cannot beat one Singapore. And then Indonesia is number 2. Okay, so it's about 20 billion consistently for the past 3 years. And Vietnam is also quite strong. Okay, also increasing steadily over the years until 2023. You see that it's 20 B already. All these are in USD, and Thailand is Thailand and Malaysia, we are about the same, but it's slightly better than us. And then Malaysia, yeah. Okay, we are always 10B, 10B, 10B. Okay, we are always talking about 40 billion ringgit, which is 10B, 10B USD. We always talk about 10B. So we have been 10 billion for many, many years. Before that, it was single digit. Cambodia, Myanmar, and then Laos. Okay, so we look at these 1, 2, 3, 4, 5, 6, up to 6 here, Philippines. So these are our competitors. Okay, in terms of FDI. Okay, so in terms of FDI, we are not doing exceptionally good. Although we are saying that this year we see a lot of FDI coming to Malaysia for the data center, and then we are very, very proud and happy about it. But if you were to compare across the ASEAN country, we are still very weak in terms of attracting the FDI. Let's compare our GDP. Our GDP, as you can see, is quite good. Okay, so we, especially 2022, it was 8.7. That is because there was a quarter, I think it was the third quarter of 2022 that we had a startup in terms of the GDP. Okay, so then this average out become 8.7. But this year we are achieving 5.3 this year. Okay, so we still have the last quarter, we still have the last quarter figure not known yet, but overall this year is good. Okay, should be above 5% this year. And compared to regional, I think we are comparable because Philippines is also as good, very good as well, easily 5%. Indonesia also 5%, and Vietnam also 5%, Cambodia also 5%. So which means that the good growth that we see, right, is not only Malaysia. Okay, it's most of our neighboring countries, they are also achieving that kind of a strong growth of the GDP. Okay, so that can be explained by foreign direct investment coming into the ASEAN country. So to invest and then to drive up the GDP. Okay. Okay. Now, what are the low lights for 2024? The low lights, I think, is the budget. The budget, if you look at it, right, although it looks like, oh, very good, it helped the lower income group, right? It is, so I would say that it is friendly on the low income group, but harsh on the business group. Harsh on the business group, and also the high income group, I wouldn't think that it will be harsh on them because they are rich anyway, so they don't care. But the middle income group is also affected. Okay, so that's why when they said that they are going to remove the subsidies, right? The middle income group is the one that very, very nervous and concerned because many of the middle income group, although we are classified, although some of you are classified as a high income group, but you feel like a middle income. Okay, so for example, the T20 because the B40 will be the lower income, then the M40 will be the middle income, T20 will be the higher income. So if let's say you are classified, your household income is classified as the T20 or T15, right? Basically your household income is making about 15,000, about 13,000 per month. Husband and wife are working, you make about 13,000 per month. 13 to 15,000 per month. And then this is considered like high income. So, but a lot of this group of people, right, even if you do household income to make 20,000, you feel like you are the middle income. Why you feel like you are the middle income? Because the expenditure is too high. Okay, this group of people, their expenditure is too high. For example, in the past, maybe you only take care of your children. But nowadays, I see many of my friends, they are all taking care of their parents. So meaning that they need to support the parents. Not only they need to support the children in terms of their education, but they also need to support the healthcare of the parents. So then this middle income group, or so-called the T15 or the T20 group, their expenditure is a lot. Okay, so which means that when the subsidies are being removed, then have to be really, really concerned. Okay, for definitely the purchasing power will reduce. Yeah, correct. We are in the sandwich generation, definitely. Okay, definitely we are in the sandwich generation. For me, I like yesterday I told the audience, if you are in the 40s and 50s, if you are about 40 years old or 50 years old, you will feel like you are in this sandwich generation, because you will be seeing that your expenditure is like too high, okay, too high, and then although your income is high, but then you feel like you are the middle income. Okay. And another one is the minimum wage. Minimum wage to 1,700, I think is too high for the business community, because a lot of like plantation or those rural area, or even manufacturing sectors. Um, in the past, I still remember maybe some 10 years ago, people still get 800 ringgit of per month of a salary. That was like maybe 2008 or 2010, 800 ringgit. Then of course there are some area is before the pandemic, I still see some of them are getting like 1,200 ringgit or 1,300 ringgit. Okay. Then suddenly after the pandemic, our our minimum wage become 1,500. And then now next year is 1,700. So I think this rate of increase is too fast, too high. Okay, and then it makes us not competitive at all in ASEAN country. You see, just now you see how our ASEAN country, we are being fair among the ASEAN country. Already our FDI is already below our neighboring country, and now we are making our cost of doing business so expensive. So definitely we'll lose out to our neighbors, definitely. Okay. So that is what I'm worried at for next year. And so we will lose out in terms of FDI, we will lose out in terms of purchasing power, because our GDP is driven by what? The basic GDP is driven by domestic consumption. Number two is driven by investment, FDI. Number three is driven by export. Okay, and then number four is driven by government spending. So government spending as in an infrastructure project. So number one, the domestic spending, domestic consumption, it will be affected because of the subsidies removal. So people generally will see that you having less purchasing power, and then you will buy less things. Okay, so the consumption will be affected. Number two, investment. Because of our expensive minimum wage, we will not be able to get so much of a FDI, especially on the manufacturing side. For the data center, maybe we can still get, but it will be slowing down as well. Then number three will be the export. The concern for me, I've been talking about is the China producing legacy chips. Legacy chips are the mature chips, okay? So yesterday I read an article. It says that China has reported that they have hit their exports of the legacy chips has reached 1 trillion yuan. Okay, for China exports, they were 100% importing legacy chips before the pandemic. Now they are exporting legacy chips and then reach 1 trillion yuan. So I think next year it will be again excess supply. Because right now, already China is over excess supply in EV industry and in renewable energy. So now the next thing in the excess supply will be in the chip, in the legacy chip, not the advanced chips, legacy chip. So that will affect our export. And this part, I think, because export we have two parts. One is the manufacturing sectors. The other one is the commodities like the palm oil, crude oil, and all this. So the palm oil, crude oil, I cannot forecast too much because the price is random. But the chip is what I can see. Okay. Then number 4, the infrastructure project. Part of the driver for the economy is infrastructure project. Now, if you look at Singapore, right, why every 2-3 years they will be building their Changi Airport? They have built Changi Airport 3, and then a few years later they say, oh, Changi Airport 4. Then now they are looking at Changi Airport 5. Why? Because all this development will have GDP. Okay, so that construction sector is also important. But for Malaysia, we have the basic construction project, which is the in the budget they have actually listed out what are the areas to do the construction infrastructure project, right? But mostly are in Sabah, Sarawak. Peninsular Malaysia, we have like maybe more like a maintenance job lah, maybe like maintaining the road, maintaining, just maintaining. No big project. Okay, the big projects are in Sabah, Sarawak. So that is a disappointment, which means that in terms of driving the GDP, we are lagging as well. Okay, so that's why I feel that next year the GDP growth for Malaysia will not be so exciting. Okay, it will be kind of like flat. Okay. So yeah, I was thinking that this year we had the LRT or HSR, but none of these. MRT 3, I thought it's already almost done. Do we still have MRT 3? I thought it's almost done, almost completing, right? I'm not sure. I'm not sure about the MRT 3 because I didn't read much about the MRT 3. But what I thought it was like almost done, except that there may be some small contract, but those small contracts maybe it's not like a big one. I'm not sure. I'm not sure about MRT 3. I think the other day I read there are a few construction company planning. Oh, it's in the planning stage. Okay. Then at least we still have the MRT 3. Okay. So which means the construction company still we should still hold on to the construction company. Now the bulk of the Gamuda construction jobs are from overseas. Yeah, that's right. Yeah, you see you see all those companies that are doing well, actually their projects are overseas. Not only Gamuda, IOI property, the property development is in Singapore, Marina Sands. And then like some of the like Front Can, many of their orders are actually from Taiwan and other parts. Okay, they are from overseas as well. And Taiwan and Singapore for Front Can. VTROX also export to US, 70% export overseas. YTR Power, 90% of their revenue are UK and Singapore. Okay, so you see that all these good ones their revenue are all foreign source. Malaysia is a small market, okay? We cannot expect to make money from local. So let's take a review our individual sectors. Construction has a good run up. However, it peaked out on the July, okay, and then now it has come down and now slowly moving higher. Okay, so this is the trend for construction. So from here to here, this one is about 190 to 300, okay, almost double. Then finance from January 16,400 till here, it is also quite a good run up, okay. Healthcare, like KPJ, Glovestock, from here 1,009, at the middle of the year it was back to square one, okay. Then however, now it went up again. Okay, so healthcare is roller coaster, but in the end still higher than the beginning. So also a good year for the healthcare. Then properties from here is 800, now is 1,000. Okay, so it's also a good run up for the properties. REIT also good. Okay, from here to here also good. And plantation, it had a bumpy road. Okay, bumpy trend. So at the middle of the month of the year, it was below the January figure, and then now it is higher. Okay, so overall still high. Then the utilities start from here and then go higher. Okay, it has come down. So now it is actually struggling around the 200-day MA line. And the transport costing down already, okay, coming to the neckline and then costing down. Now this transport normally it tells you the pulse of the economy, like the pulse of the economy, which is the livelihood of the economy, because these are the transport, right? So if let's say you happen to see this one going down, like a downtrend, it's not good for our economy. Okay, which means that our economy may be contracting. So so we have to observe this whether it will cross down or not. Okay, so the rest, okay, so 1, 2, 3, 4, 5, 6, 7, 8. Okay, out of the 13 sectors, 8 of the 13 sectors are up. So if let's say your portfolio includes construction and this finance and all this, right? If you include all these or any of these okay, combination of these, you should be making money this year. You should, okay? Also depends on whether you are, like, for example, this one, whether you are buying from here or if you buy at the wrong timing, also you may lose money. But if let's say in a general sense, right, should be quite comfortable with your portfolio. Okay. Yeah. Then which are the sectors that are not making money? Okay. Consumer, below the January. January you start from here, right? Now you are below the January. Okay, so no wonder Nancy was saying that BAT, British American Tobacco, was so cheap, because this BAT I never really look at their chart, because I'm not interested in the BAT. Then when Nancy told me that, I started to look at the chart, and then I was very surprised to see the price is actually 7 ringgit, which I never expect BAT to reach to this point of 7 ringgit. So it must have been a hard year for the BAT, but it also means that it could be a bottom for the BAT. Okay, so consumer, no good. Okay, consumer is down, right? Then will you be thinking that, hey, next year will it be up? Okay, even though if there's up, right, it will be still weak. There is a chance that it's a W lah. Okay, because now you see that this one is forming a W. So there's a chance that it's a W. So if let's say it's really forming a W, then you may take the opportunity to buy into the consumer stock, because after all, consumer stock is a safe stock as well. So if let's say the pricing wise has come down to a attractive level, and then you can take the advantage of buying at a cheaper price and then sell at a higher price. Okay, so this consumer can observe. And another one, technology. Technology, this one is a W. Okay, and then it's like going to break out from here. So however, as I said, technology has many types of technology stocks. So some technology stocks like Frontend, they are cleaning services. So they are not the cheap company. So then they may be less impacted by the China oversupply of the chip, because their customers can go all the way to China. They can clean the part for the China, they can clean for Taiwan. Okay, so for Frontend, I think their business model is okay. So then you have to look for companies that are not so much impacted by the chips. Like some company are pure chip, legacy chip manufacturer. This one you have to be careful. I think Gtronic. Okay, Gtronic is one of it. VS Industry is also another one. And for Inari, they are not only doing chips, but they are also doing equipment. They are doing a whole chain of the uh, semiconductors industry. So then they are diversified a bit. Okay, so you have to see which technology stock can, so will be a mixed bag, a mixture lah. So in this case, technology stock, some tech stocks are okay, some tech stocks are not okay. So you have to selectively choose the right one. Okay. NPI, the other day we read the NPI, they are producing the chip or the equipment, right? It's related to the automobile industry, right? Remember? I think, was it related to the automobile or the consumer? So if it's related to the, yeah, it has to be linked to the data center. But if it's related to the automobile or consumer, that one you have to be careful, because this industry is also slowed down already. Okay, so that's why you have to look at what they do. MI Technology is equipment, okay, but however, MI Technology, I think MI Technology should be okay, because they are equipment. They are not the chip. They are the equipment. So they are like Vitrop. So MI Technology is okay. Great Tech, they are producing the charging. Is it the charging charger? They are producing the charger, right? And also the something to do with the solar panel, is it? Okay, so if let's say they are producing charger, solar panel, I think this one should be okay. Okay, not so directly related to the legacy chip. So in the end, there are some tech stocks are still okay. So then you just have to be selectively. Okay. Then this one is a telco. For telco, actually it has been down for, if you look at the 4 years chart from 2020 until now, it has been down for 4 whole years. 4 whole years down. I don't know what to say about this industry. I don't know whether next year will up or not. Mm, so yeah, so have to be uh if you are buying into this one, I think we don't buy, or either you buy a little or you don't buy this sector, because this sector is very challenging. Number one, it has a lot of capital expenditure. Number two, competition. It's very mature market share already. In the past, where this industry was still growing, you are looking at people buying SIM card, like you have one SIM card, two SIM card, three SIM card. But now people already with the two SIM card, three SIM card are already saturated. They are not changing the SIM card anymore. So So this market is very saturated. So the competition is there, and then the cost is there. Industrial, we are looking at like Petronas Chem. We are looking at some of the Hong Leong Industries, Titan Chemical. These are all heavyweight industrial stocks, and they are not performing well. Okay, because these industrial stocks, they are actually looking at the pricing of the product. Like for example, petrol PChem, right? They're selling the kind of product. The chemicals are very specialized. I forgot the name of it. It's what with the THANE, something like Litten or something. The pricing are not good because these are the like a commodity. The pricing are determined in the international market. So the pricing are not good. So that's why you can see the revenue are not so strong. Okay, so but these are all cyclical. So meaning that now their pricing may not be good, but maybe next few years the pricing may be up again. So I will see that industrial and some of the tech stocks are actually under the industrial. Maybe VS industry, and then some of the tech stocks are under industrial. So maybe that also affects as well. Okay. At the moment there is no, I haven't seen a breakout yet. No breakout, and then it is still on a downtrend. Okay, so all these downtrend sectors, it shows that they are weak in their own field, fundamentally weak. Okay, so fundamentally weak, meaning that we should try to avoid first. Okay, so all are weak. Even just now, this one telco are weak. This one also weak. This one also weak. Okay, so we should avoid first. Even the technology, you have to be selective. Then energy, oil and gas, also weak. Okay, so all this we have to avoid. Okay, how about TMK Chemical, just listed recently? Okay, the IPO, I'm not sure about the IPO because I don't really look at the IPO so much. Okay, so here you see that there are certain sectors that are doing well. So moving forward, what are the sectors that we can still hold on to next year? For me, I think that REIT, we can hold on to it because we have to think about stability. So stability will involve dividends. So REIT, number one, finance banks, number two, construction is for this is not a dividend stock. This one is for cyclical, one is for growth. Okay, so construction is for growth. And this one is dividend. This one is for growth also. Okay, so if let's say you want to speculate on the growth stocks are for growth. Properties is also for growth. REIT, dividend. Plantation, dividend. Utilities, dividend. Okay, so all these that I show you, that I flashed for you, these are the ones that you can hold for next year. This one, no. Okay. Then come to the next year. Next year, the eclipse dates are March. And end of March, you have the solar eclipse. And it is visible in the Europe, North Asia, Africa, much of North America, South America, and Atlantic. So up there. So Malaysia, we are here. So we are safe. Okay, so it will be there, very far from us. Then another solar eclipse is here. Oh, in Australia, Atlantic, but it's still it's in Australia, but then it's not near us as well. Okay, so which means that next year we should be fine in terms of politics. Okay, we should be fine. Then in terms of the stock market, I think also should be fine. Okay, because looks like it's not in Asia. These are not in Asia. Except this one. this one, the lunar eclipse is in Asia. Asia, Australia. Okay, so this one, which is September. So which means that maybe towards the year, the third quarter of next year, maybe some emotional there. Okay, so basically, in terms of the stock market, maybe the third quarter of next year. First half of the year should be fine, but the second half of the year, especially the third quarter, maybe there will be some form of a correction. Okay, so then you can plan when you want to sell. So you may plan sell in the first half of the year, if let's say you want to sell, and then you can buy at the second half of the year. Okay. Then just now, I think Kate mentioned about the US quantum computing, right? So besides the quantum computing, I have a table here that lists out the AI chip, what are the companies, quantum computing, what are the companies, humanoid robots, and drones, because drones is also up and coming. So I'll see more and more delivery using the drone. Okay, we already saw deliveries using the drones in China and in US. Okay, they're using drones already. So it will be getting more and more popular. Maybe these drones are more popular than the humanoid robots, because humanoid robots, it takes some time, but the drones are very fast. Okay, so then these are the companies. Amazon. In fact, if you to invest in a big tech seven company, they are also involved on all these. Like you said, Google is in quantum computing, Microsoft, Google, and then Nvidia is in humanoid, and also Tesla is also in humanoid. Here AItrip.com, okay, TSMC, and all this. Boston Dynamics. This one is Hyundai. Hyundai invested in the Boston Dynamics. Because currently Boston Dynamics is not a listed company yet. Okay, but then I think they are going to list. Okay, so these are the US company. Magnificent Seven, yeah, that's right. I cannot remember what Big Tech Seven, Magnificent Seven, yeah, correct. Then the other one, Malaysia. I think for next year we can focus on these sectors. The banks for the dividend, utilities and the risk, all these three are for dividends, and then the construction is for the growth. Okay, so you have like 75% on dividend and then 25% on the growth. So this is a very, very safe. I wouldn't say 100% safe. I would say that this is a very stable portfolio. Okay, if let's say a portfolio is made out of this kind of a combination, right, it will be quite a stable one. Okay, which means that you won't see too big volatility. Unless there is like a big market sell down, like there's a big market crash or whatever, then the banks will come down. Okay, if there's a financial crisis, the banks will come down. But I don't think there will be one for next year. So the banks, the construction company, the utility, the REIT. Okay, so far I haven't got any REIT yet, so I may buy into the REIT. Okay, all these are already in my portfolio. I haven't got the REIT. Okay, then Singapore stock. So if let's say you are interested in the Singapore stock, these are the sectors that I think are good. Yeah, 75% dividend, 25% growth. It's a very, very conservative portfolio. 25% dividend, 25%. It's a super conservative portfolio. So you can see how conservative I am towards next year. Okay. But I may not be correct. But it's just that I just feel like I want to be safe. That's all. Okay. For Singapore stock, I feel that the banks are good because, as you can see, Singapore is a financial hub among the Asian you look at Asia, not only ASEAN, you look at Asia, the whole of Asia. Used to be Hong Kong is a financial hub, but now people turn to Singapore as a financial hub. And in terms of the global position, right, it is also a financial hub in terms of globally. So I would think that their banking is good, but however now today I checked the price appreciation for the DBS is actually very, very scary. This year alone, DBS has increased capital gain of 50%, 50. For a bank to have a 50% growth, it's considered a very big move already. Okay, so maybe you have to wait for a while to accumulate this stock because they have gone up too much this year. Yeah, you're right. Yeah, wait on. Increase price. Yeah. Okay. Like 50% for DBS. Normally banks don't increase so much. Okay, normally. The most is 20% is already like a big laugh already, but this is too much. So you have to wait for retracement. Okay. Then the property, because for Singapore the land is limited, so that's why I feel that. And then the government always control the supply. They will make sure they will have a plan ahead. They will say that okay, this 2025 we will only release how many thousands of units of home to the market. They will calculate until how many units of home to the market available to the people. They will calculate until like this. So meaning that they are controlling the housing supply very, very tightly. They will not allow any form of speculation, but which they cannot control too much because they will try not to allow for speculation, and then they will also try to stabilize their property prices as well. Okay, so that properties, and then the REIT, same thing. Okay, then that's all for this slide.